Dreaming of making money while you sleep? This video unveils 3 lazy investing strategies that let your hard-earned cash work for you, even on autopilot. 1. Invest in index funds. Index funds have become a popular choice for investors of all experience levels. But what exactly are they? And why should you consider them? Imagine a basket filled with a variety of fruits. An index fund is like that basket. But instead of fruits, it holds a collection of stocks or bonds that mirror a specific market index, like the S&P 500. This index tracks the performance of a group of companies. By investing in an index fund, you're essentially buying a small piece of each company in that index. Remember to hit subscribe for weekly wealth creation tips. Benefits of index funds include diversification. Index funds offer instant diversification, which is a fancy way of saying you're not putting all your eggs in one basket. By spreading your investment across multiple companies, you reduce the risk of losing everything if one company performs poorly. Low fees. Index funds are passively managed, meaning they simply track the market index. This translates to lower fees, compared to actively managed funds where managers are constantly buying and selling stocks. Long-term growth. Historically, index funds have delivered consistent and positive long-term returns. While past performance doesn't guarantee future results, index funds offer a reliable way to grow your wealth over time. Low maintenance. Once you invest in an index fund, you don't need to constantly monitor the market or pick individual stocks. It's a set-it-and-forget-it approach to investing. Index funds are a great option for a variety of investors, including beginners. Their simplicity and diversification make them perfect for those new to investing. Long-term investors. If you're investing for a long-term goal like retirement, index funds can help you weather market fluctuations. Busy professionals. They require minimal time and effort to manage, making them ideal for people with busy schedules. Getting started with index funds. Investing in index funds is easier than you might think. Here's how to get started. Open a brokerage account. This online platform allows you to buy and sell investments. Choose an index fund. There are many index funds available, so do your research and find one that aligns with your investment goals. Invest and relax. Set up automatic investments so you can contribute regularly and watch your money grow over time. Remember, investing always carries some level of risk. While index funds are a great way to build wealth, it's important to consult with a financial advisor to develop an investment strategy tailored to your specific needs and risk tolerance. 2. Invest in dividend-paying stocks. Imagine your investments not only growing in value, but also paying you a regular income. This is the beauty of dividend-paying stocks. These are shares of companies that distribute a portion of their profits to shareholders on a quarterly, semi-annual, or annual basis. Why consider dividend-paying stocks? Passive income stream. Dividends provide a steady flow of income that can be reinvested, used to supplement your salary, or enjoyed as additional income. Hedge against inflation. While not guaranteed, dividend increases can help offset the rising cost of living over time. Signal of company health. Companies that pay dividends are typically established and profitable, indicating financial stability. Long-term wealth building. Reinvesting your dividends allows for compound interest, meaning your earnings grow on top of your initial investment and previous earnings. Important considerations. Dividend yield. This is the percentage of a company's stock price paid out as a dividend. While a high yield can be tempting, it's not always the best indicator. Focus on companies with a sustainable dividend history and strong financials. Growth versus income. Dividend-paying stocks tend to be larger, established companies with slower growth potential. Consider your investment goals. Income generation or capital appreciation. Volatility. Like any stock, dividend-paying stocks experience price fluctuations. Invest for the long term, and don't panic over short-term dips. Finding the right dividend stocks. Research companies with a history of consistent dividend payouts. Analyze their financial health and future growth prospects. Consider industries known for dividend payouts, like utilities or consumer staples. Consult a financial advisor for personalized recommendations based on your risk tolerance and goals. Invest in dividend-paying stocks to create a reliable income stream and build long-term wealth. Remember, diversification is key. So combine dividend-paying stocks with other investment strategies for a well-rounded portfolio. 3. Real estate investment trusts REITs. REITs offer a unique way to invest in real estate without the hassles of traditional ownership. What is a REIT? Think of a REIT as a company that owns, operates, or finances income-producing real estate properties. These properties can be anything from apartment buildings and office spaces to shopping centers and warehouses. By investing in a REIT, you're essentially buying a share of this company's real estate portfolio. Benefits of investing in REITs include accessibility. REITs offer a chance to invest in real estate with a lower minimum investment compared to buying a physical property. Diversification. REITs can provide exposure to a variety of real estate sectors, reducing risk compared to owning a single property. Passive income. Most REITs are required by law to distribute a significant portion of their taxable income to shareholders in the form of dividends. This provides a steady stream of income. Professional management. REITs are managed by experienced professionals who handle all the day-to-day operations of the properties, freeing you from tenant issues and maintenance headaches. Liquidity. REITs are traded on major stock exchanges, allowing you to easily buy and sell shares when needed. Types of REITs. There are different types of REITs, each specializing in a specific real estate sector. Equity REITs. These own and operate income-producing real estate properties. Mortgage REITs (MREITs). These invest in mortgages or mortgage-backed securities, generating income from interest payments. Hybrid REITs. These combine characteristics of both equity and mortgage REITs. Considering REITs? Here's what to know. Research different REITs. Understand their investment strategy, property types, and historical performance. Dividend yield. While attractive, don't solely focus on high yields. Consider the REIT's overall financial health and sustainability of its dividends. Liquidity. Some REITs may be less liquid than others, meaning it might take longer to buy or sell shares. Fees. Be aware of any management fees or other charges associated with the REIT. REITs can be a valuable addition to a diversified investment portfolio, offering the benefits of real estate ownership without the management burdens. Do your research. Choose the right REIT for your goals, and unlock the potential of real estate riches. So, there you have it. 3 lazy investing strategies to make money while you sleep. Stop letting your money sit idle. These strategies are your key to financial growth on autopilot. I hope this video helps you in being one step closer to your financial goals. Please give a thumbs up on the video if you have enjoyed watching. If you have any questions, please leave them in the comments below. And be sure to subscribe to our channel for more wealth creation tips. Bye.